Welcome back. It's been a terrific debut for a couple of stocks today, and one such name is Ellenbarrie, the industrials gases. The stock, in fact, listed at a 20% premium to its issue price. And now we have the management who will be obviously looking quite happy. We have the CMD, Mr. Padam Kumar Agarwal, as well as the joint MD, Varun Agarwal, who join us. Gentlemen, congratulations. Good to see smiling faces, and welcome to the stock market. Well, we're going to be interacting almost on a quarterly basis, if you'd like, even more than that. Let's get a couple of numbers out of the way, though. Since now you're already listed, you'll have the leeway to go ahead, and the regulator as well will be happy if you'll give some kind of guidance. Now, in the last few years, revenue growth has been in the vicinity of 20-25% approximately, but profitability has been even better. So let's get those numbers out of the way. Can you continue at this sort of a revenue growth rate? And also margins, beautiful move, right? From high teens to around 35%. Can you hold out here?
Yeah, I'll take that, actually. Thank you for having us on the show. And look, the growth rate is going to continue. We are putting up a lot of new capacity, which will be coming online over the course of the next year or so. Margins, I think, as we grow, we get operational leverage, and we would expect margins to, in fact, edge even higher and, sort of hit an EBITDA margin number, which could be even upwards of 40%.
All right. So you believe EBITDA margins can be upwards of 40% as well. By which year would that be? In FY26 itself, that's a possibility?
Once a new capacity comes in, so maybe FY27 would be a better indicator.
All right. Just a follow-up on that, the new capacity for which you are deploying about 105 crores in terms of capex, that was one of the objects of your issue. What is the kind of turnover or annual revenue that, that accrues for your business? That's one. And secondly, you will be paying about 200 crore of debt as well. What does that take your balance sheet to? Do you become net debt free?
Yeah, we do become net debt free. And in terms of turnover, just to guide, we were doing about 300 plus crores of turnover based on a capacity of about 600 tons per day. We expect our capacity to go up to north of 2,000 tons per day. So, if you extrapolate those numbers, we would see strong revenue growth going forward.
So back of an envelope calculation will suggest that your capacity, currently you're at 600, right? And you're going to go to 2,000. So effectively, your total turnover potential is more than 1,000 crores.
Yes, I think so. We were at 600. Currently, we are running at 1,370 tons per day and looking to expand this to about 2,200 tons a day.
So revenue potential?
The revenue potential from here is significantly higher.
So 1,000 plus crores, right?
Yeah.
And by when do you hit that?
I mean, that's a sort of more of a medium-term plan over the next 3 to 4 years is what we are targeting.
All right. Let's go across to Mr. Padam Kumar as well. Because you are setting up so many capacities, because you are hopeful of this 20-25% sort of growth continuing with margins at around 40% odd, what would be the end-use industry that would drive this growth? If you could give us a sense of what proportion of your revenues comes in from what industries. What we're given to understand is that you have exposure to steel, pharma, chemicals, and hospitals. They are all major drivers of your demand. If you could give the breakup of what industry do you contribute to the most?
As of now, we are getting our maximum revenue from iron and steel businesses. Pharma comes second. Going forward, we feel that these businesses will remain our mainstay. At the same time, we would expect additional revenues from healthcare, and there is a host of new age industries like solar and electronics, semiconductor, etc. We are positioning ourselves to cater to the upcoming demands of this fast growing sector.
Right. And if you could give us a breakup, you said maximum revenue comes in from iron and steel. How much of that it would be? And Is there any margin differential in the industries that you supply to? Say healthcare gives you more margins or everyone gives you similar margins, because at the end of the day, it's just gas that you're supplying.
Generally, we would expect something like a 30% from iron and steel and slightly lesser from pharma and bulk drugs. Prices are generally the same for all industrial products, but when we are talking of products other than industrial, even including medical, because of requirement of quality consciousness and a few tests also which we do, those would generally tend to give us slightly higher revenues.
All right, just a quick question about competition. Do you compete with the likes of the Inox Group, Linde? Could you comment on that?
Yes, I mean all manufacturers of similar products remain our competitors. Linde definitely had a head start, being more than a 100-year-old company. So, I mean, it's we do compete with bigger companies bigger than us, and we will continue to do so.
Okay, no, what we understand is, and I'd like Varun to answer this, because is there any exclusivity clause that you have as against competition? Because, you know, the feeder industry is the same. You have the end user industry, which is the same. What differentiates your business from the others? What is your moat, so to say? Is there any exclusive contract that you have with any sort of upcoming capacities?
No, so generally, the customers that we cater to, we are their exclusive suppliers in general, and you know, we typically sign very long-term contracts in the region of 5 to 15 years. So, you know, the moat at the customer level is very strong. At the industry level, of course, we all compete because we provide similar products and services. But there are distinguishing features, you know, in terms of our competitive advantage. We are very agile. We have a strong customer connect. You know, so those are our core strengths. And of course, our competitors are strong as well. And you know, at the customer level, as I said, there is a great deal of exclusivity because of the long tenure of the contract.
Got it. All right, gentlemen, appreciate you joining in, fielding our questions. Peak revenue, as per what the plan goes about, is more than 1,000 crores. And if you're going to do margins of around 40%, the EBITDA number translates to around 400 crores on a current market cap of around 7,700 crores. Thanks a lot for joining in. Enjoy the day and congratulations on this listing. We look forward to having a chat with you all rather soon. Well, for the time being, we slip into a break. Come back, continue our focus on markets. Don't go anywhere.